Welcome to House Lux Estate, your trusted guide to financial recovery and stability. Today, we're going to shed some light on a complex yet crucial part of personal finance, rebuilding your credit score after bankruptcy. But before we dive in, let's briefly touch on what a credit score is. It's a numerical representation of your creditworthiness, a key factor that lenders look at when deciding whether to extend credit to you. It's like your financial reputation. And just like in life, rebuilding a reputation takes time and consistent effort. After bankruptcy, it becomes even more essential to rebuild this score because it can affect everything from buying a house to getting a job to how much you pay for insurance. So, it's not something to be taken lightly. Stay tuned as we dive into the steps to rebuild your credit score. Together, we will navigate this journey towards financial recovery. Bankruptcy can be a daunting experience, but it's not the end of your financial journey. In fact, it's more like a reset button, a chance to start anew with a clean slate. So, what exactly is bankruptcy? In layman's terms, bankruptcy is a legal process that can help individuals or businesses who are unable to pay their debts to either eliminate or repay some or all of it under the protection of the bankruptcy court. Now, let's talk about the elephant in the room, your credit score. A credit score is a numerical expression that represents your creditworthiness. It's based on a level analysis of a person's credit files, sourced from credit bureaus. Your credit score can be negatively impacted by bankruptcy, and it's no secret that a lower credit score can make things a bit challenging. It can affect your ability to get new credit, a mortgage, or even a job. However, it's important to remember that the impact of bankruptcy on your credit score is not permanent. It's a temporary setback, not a lifelong sentence. Bankruptcy does stay on your credit report for 7 to 10 years, depending on the type, but its impact lessens over time, and you can start rebuilding your credit score immediately. Rebuilding your credit score post-bankruptcy is crucial. It's like rebuilding a house after a storm. It might seem overwhelming at first, but with the right tools and resources, it's entirely possible. The importance of taking immediate action to rebuild your credit score cannot be overstated. It's a critical step towards financial recovery and stability. So, how do you start rebuilding? Patience and persistence are key. It's a process that requires time, discipline, and a well-thought-out strategy. But don't worry, we're here to guide you through it, step by step. Now that we understand the impact of bankruptcy, let's explore how to rebuild your credit score. The first step to rebuilding your credit score is to assess your credit report. Now, what's a credit report, you ask? Well, it's a comprehensive record of your credit history, including your loans, credit cards, and payment habits. It's like a report card for your financial health. But how do you get your hands on this all-important document? Simple. You're entitled to a free credit report every 12 months from each of the 3 major credit bureaus: Experian, TransUnion, and Equifax. Once you have your report, it's crucial to go over it with a fine-toothed comb. Look for any errors or inaccuracies, like debts you've already paid off or accounts you don't recognize. If you spot any, don't hesitate to dispute them. Clearing up these errors can give your credit score a significant boost. Once you've assessed your credit report, it's time to move on to the next step. Budgeting is an essential part of rebuilding your credit score. It's like plotting your journey on a map. You need to know where you're starting from, where you're going, and the best way to get there. A budget is just that, your financial roadmap. It's simple, really. Start by tracking your income and expenses. See where your money is going and identify areas where you can cut back. This will help free up some cash that can be used to pay off existing debts or saved for emergencies. Remember, a budget isn't about depriving yourself of things you enjoy. It's about making informed decisions on how to spend your money wisely. It's about realizing that every dollar counts and that you have the power to control your financial future. Creating a realistic budget that aligns with your income and lifestyle will help you manage your finances better. And remember, a well-planned budget is your first defense against falling back into financial distress. With a budget in place, it's time to start building credit. So, how do you start building credit, especially after a major financial setback like bankruptcy? It may seem daunting, but don't worry, there are several avenues you can explore. One great starting point is a secured credit card. Unlike traditional credit cards, secured cards require a cash deposit which serves as your credit limit. They're designed specifically for individuals looking to build or rebuild credit, and they function just like regular credit cards. You make purchases, you make payments, and your activity is reported to the credit bureaus. Over time, this helps to establish a history of responsible credit use. Another option is a credit builder loan. These are small loans offered by some credit unions and banks to help individuals improve their credit. The money you borrow is held in a savings account while you make payments. Once the loan is paid off, you receive the money back, plus interest. The key benefit here is that your loan payments are reported to the credit bureaus, again helping to build a positive credit history. But it's not just about getting new credit, it's about using it responsibly. That means making all your payments on time every time. Late payments can severely damage your credit score, so it's crucial to stay on top of this. Set up automatic payments or reminders if you need to. Also, try to keep your credit utilization low. That's the percentage of your available credit that you're using. A lower credit utilization rate can positively impact your credit score. And finally, remember that building credit is a process. It takes time to recover from bankruptcy and rebuild a strong credit score. But with patience, consistency, and responsible credit use, you'll get there. Remember, rebuilding credit is a marathon, not a sprint. Patience and consistency are key. So don't be discouraged by slow progress. Keep going, keep building, and before you know it, you'll be on solid financial ground once again. As you work towards rebuilding your credit, it's crucial to avoid new debt. This is a concept that might sound quite straightforward, but it's often easier said than done. Why so? Because new debt can easily offset your efforts to rebuild your credit score. Every time you take on additional debt, it becomes yet another financial obligation that you need to manage. Let's think about it this way. Imagine you're trying to clean a room while simultaneously throwing more clutter into it. It's counterproductive, isn't it? That's exactly what you're doing to your credit score when you accumulate more debt while trying to rebuild it. So how can you avoid this pitfall? First, establish and stick to a realistic budget. Second, distinguish between wants and needs. Third, create an emergency fund to handle unexpected expenses. Finally, consider using cash or a debit card for purchases instead of credit. Avoiding new debt is just as important as building new credit. Remember, it's all about striking a healthy financial balance. Rebuilding your credit score after bankruptcy may seem like a steep hill to climb, but with the right steps, it's entirely achievable. It's all about taking it one step at a time and understanding that this is a marathon, not a sprint. Let's take a moment to recap the steps we've discussed throughout this video. Firstly, we talked about the importance of assessing your credit report. It's essential to know exactly where you stand financially. Review your report, identify any errors, and take steps to rectify them. This is the first step towards financial recovery. Next, we delved into the importance of establishing a budget. It's about being proactive with your finances rather than reactive. A well-structured budget helps you to live within your means, save for the future, and avoid falling back into debt. Remember, the goal isn't to limit your freedom, but to create it. Thirdly, we discussed the importance of starting to build credit. This might sound counterintuitive after going through bankruptcy, but remember, it's not about borrowing more money. It's about proving to lenders that you can manage debt responsibly. This could be through a secured credit card or a credit builder loan. Finally, we talked about the importance of avoiding new debt. It might sound obvious, but it's worth repeating. It's all too easy to fall back into old habits. But remember, you're building a new, more financially stable future. Make it a point to live within your means, pay your bills on time, and avoid unnecessary debt. Rebuilding your credit score after bankruptcy isn't easy, but it's more than possible with patience, determination, and the right guidance. You've already taken the first step by educating yourself, and that's something to be proud of. Thank you for joining us at House Lux Estate. Remember to subscribe and stay tuned for more financial advice. Here's to your financial recovery and stability.